Ladies and gentlemen, without any further ado, let's welcome Mr. Mihir Shah, who's the VP Media Partners Asia, who will be presenting the keynote, and he's going to speak about overview on Indian media and entertainment industry, the changing landscape and its future. So Mihir, over to you.
Yeah, thank you very much. Well, good evening, everyone. Thanks, NASCOM and NASTech for inviting us and giving us this opportunity to share our views on India's video market. Just a brief about Media Partners Asia. At MPA, we provide research, advisory, and consulting services to telecom, media, and tech companies across Asia Pacific. I head up the India business for MPA. And yes, the last 12, 18 months have been very exciting in India. Today I'll be sharing some of the trends that we are seeing on ground in India and structural changes which are shaping the course of the video market. So without further ado, let me just get diving into the presentation. So, the slide here shows, it gives you a good aerial view or bird's eye view of the total video market in Asia ex-China, which stood at about $65 billion as of end last year. Now, India had a significant 16% share of the market. However, what we see in the next 5 years, for every new dollar which will come from the Asian region, one of every $3 will actually come from India. Importantly, for this incremental dollars, the share of incremental dollars are almost evenly divided between both traditional television networks as well as OTT or online video. It is for this reason India holds a lot of strategic importance both for the television networks globally as well as global internet players which are making huge investments into the market. So, as over the next 5 years, the overall video pie expands to about $85 billion. We expect India's share in there to grow to about 20%, maybe even higher with the entry of new players which are investing in India and expanding the opportunity. Let's, kind of rewind back and let's look at 2020. So no doubt 2020 was a painful year for the economy. We had a national lockdown, the strictest form of lockdown last year. And all production activities came to a grinding halt somewhere around in March. Now that had a domino effect across the video industry. There was lack of fresh programming hours, consumer demand came to a standstill, and as a result of which advertisers held back their spends. I recollect during the lockdown months, some of the leading broadcast networks were operating at 20% or less inventory utilization. Now, overall, we estimate the ad market last year would have declined by about 25%. So this had an adverse impact on the content industry, which any which ways was struggling to get back on its feet. Now, it was this pressure cooker period which kind of, got to the fore a lot of innovation and technological prowess for the content industry. So for instance, many of the production houses resorted to digital first releases. We had the most successful IPL ever last year without having any audiences or any spectators at the stadium. And that's thanks to excellent post-production, excellent sound design, which kind of created an illusion of stadiums filled with spectators. And that's a kind of a template which was taken again, in 2021 when India was hit by the second wave. A lot of learnings in that sense for the content industry last year. We have new standard operating procedures in place. With the economy reviving, the industry is only looking up. Let's have a look at how the television market fared. Firstly, of course, television viewership went through the roof. It grew significantly because, and as a part of the lockdown, most of the viewers were confined to their homes. So TV viewership continued to grow through the year. But it was only in the second half with the coming back of fresh programming hours that we started to see an increasing ad volumes, especially with the coming back of live sports. As we stand right now, the industry is also actually ripe for taking an ad rate hike with the coming of the festive season. So we are quite confident, given the low base last year, 2021 will see a healthy double-digit growth for the TV ad market. On distribution, and now specifically looking at the DTH industry. So DTH industry has been growing well through in 2019. 2020 has been a mixed bag, more anchored to how the pandemic actually played out through different months of the year. So in the initial lockdown months of March and April, since people were confined to their homes, we saw a significant rise in activation rate. However, as I said, India had the strictest form of lockdown. So there were very few net new additions for the industry. Subsequent months, there was lack of fresh programming hours. We had the migrant worker issue. We had, commercial establishment shutting shop. So we saw a higher level of suspension. Also, there was lack of fresh programming hours with the exception of news. So most of the subscribers resorted to downselling and opted for a low tier base pack of subscription. Second half of the year, things started to improve as fresh programming came back, especially with the coming back of live sports and IPL in September. Since then, we have now seen a gradual case of upselling, and subscriber additions also have been quite healthy. If we extrapolate the growth for the next 5 years, and if you look at the forecast for pay TV, DTH will be the major driver for growth in pay TV. We will see 10 million new net pay TV subscriber additions primarily coming through DTH. On the other hand, cable as such is on a structural decline. We have seen consolidation in the cable industry, especially with national cable operators. Say most of them have been acquired by telcos, particularly Jio, which is now looking to leverage these assets to get last mile access to drive fiber broadband and its aspiration to introduce IPTV. So cable as such is on a structural decline because a larger part of the cable industry, most of the regional operators don't have the balance sheet to build scale. Irrespective, the pay TV subscription market in India will grow both in volume as well as in value. The market, we believe, still over the next 5 years is supposed to become a $7.5 billion revenue opportunity. So television per se in India continues to offer a lot of scales. If you look at, India's TV household penetration is just at about 55%. This is way lower compared to the Asian median average at about 85%. In absolute terms, also India offers a lot of scale. We have about nearly 130 million active paying subscribers. Nearly 95% of the subscribers are now digitalized. So for channel business or for broadcast industry, with the rebound in economy and a sharp growth in advertisement together with a healthy growth in subscription, the channel business in India is still set to grow at about 10% CAGR from $4.5 billion to more than $7 billion in the next 5 years. However, everything is not rosy. As the market opportunity expands, we are also seeing a case of consolidation. There are a couple of factors here. I mean, in 2019, TRAI, which is the regulatory body, came out with regulations, a new tariff paper, which has put price caps on channels. It has also introduced restrictions on formation of certain channel bouquets. This, to some extent, adversely impacted the reach and thus the advertisement revenue of many niche and smaller channels. Well, a lot of this situation was, the situation actually became quite acute with COVID and pandemic hitting the broadcast industry last year. So as a result, 2 years since the regulation and with pandemic hitting the industry, we have seen about dozen odd channels either shutting shop or many of these channels have gone direct to consumer, have moved their content online. But we are seeing in general for the broadcast industry going forward, scale is what will be really driving growth and the future prospect for broadcasters. We're also seeing this playing out in recent talks about Zee and Sony merging together. So it's not just the smaller players, but even larger players are looking to join forces and build scale, which is what will set the tone for the economics in the broadcast industry. To look at OTT or online video, I mean, really, we had multiple tailwinds for all form of online commerce, especially OTT video. Now there's a dire need for consumers to own a high computing handheld device. Last year, we saw about 100 million 4G devices getting sold. An average consumer is now consuming close to about 14-15 GB of data per day. Time spent online has now exceeded that on television. In fact, time spent on online video has grown by about 30%. It continues to grow even post-lockdown phase. So it's a structural change that we are seeing. We are seeing a significant consumption in online video. Partially, this is also, I mean, some part of it could be attributed to array of online video services and options which are available to the consumer. In the last 5 years, we have seen a five-fold increase in number of OTT services in India. And on last count, we have close to about 65 online video services in India. So the total addressable market for online video will continue to expand even. Well, the digital economy got a major fillip with the launch of Jio in 16 and the ensuing price war. Since then, 3 years fast forward to Jio's launch, India's mobile broadband penetration has gone up from 15 to 45%. Now with pandemic hitting us, a lot of physical activities have got replaced by digital alternatives. Broadband pricing remains affordable. Average user is now having much better experience with better speeds and is exploring new use cases of data. So in the next 5 years, we are quite confident that 3/4 of India's population will have access to high-speed mobile broadband, and average usage of data per user will actually go up, nearly about double up from where it is currently. Telcos have also now, moved or are looking to, gain their presence in the lucrative home market. Last year, leading players, Airtel, Jio, they slashed their fixed broadband pricing by about 40%. They're offering now unlimited data at better speeds. Traditionally, fixed broadband, which remains subscale, we are still at about 20 million fixed broadband penetration. This number will nearly double, maybe 35 million or more in the next 5 years. Still low compared to the overall household penetration at 15%, but fixed broadband will get a major fillip. The quality of fixed say will improve substantially because more than 80% of this fixed broadband homes will be delivered through fiber. Of course, to push fixed broadband services, Jio is hard bundling, so is even Airtel hard bundling a lot of OTT services to compete more effectively. Both Airtel, which is also into DTH business, and Tata Sky, the incumbent pay TV operator, they are hard bundling a lot of OTT services and investing in connected TV solution. So with this, let's have a look at how the connected TV market has evolved in India. So in the initial years, incumbent pay TV operators were offering TV everywhere services. This was to kind of compete with a very nascent OTT market then. Thereafter, with the proliferation of smart TVs and growth of fixed broadband, many of them started to offer dongle-based solutions. Now, these are typically unmanaged devices. They not give much data with respect to consumer viewership trends. So in the last few years, we have seen likes of Airtel and Tata Sky investing in connected hybrid boxes. These are managed devices. They help giving insights about consumers' viewing habit. This allows operators to keep a check on churn, but also helps them to upsell a lot of subscription services, both on linear and OTT. In the long term, as connected STBs build scale, we see a lot of scale. You'll see a new modes of monetization being explored by pay TV operators like advertisement or even Internet of Things. So if you look at it, connected TV boxes in India as of end last year, about 2 million. As we close this year, we will have 4 million or more active paying connected TV subscribers in India. This is connected TV STBs from pay TV operators. This, we believe, in the next 5 years, the base will grow to about 20 million. It's a five-fold increase, more anchored to the growth of fiber broadband that we see in urban market. This slide shows a pyramid, India's video pyramid in terms of consumption or viewing habits. So typically, if you break down Indian TV households, the top 5 million households, they have a propensity to pay anywhere between $10 to $15. They are the ones who will typically buy any new product, service, or content which is introduced in the market. Further down, you have this 25 million, which are typically your high definition subscribers or subscribers which opt for a premium English tier on pay TV. They are the ones who will also pay for SWAT services. They have a strong affinity to local content and are willing to pay for even online video content. Then down further, you have this big bulge of 70 million. This is where most of the pay TV operators, pay TV subscribers reside. This is the base pack for pay TV, where consumers pay anywhere between $3 to $5. Most of these subscribers are also consumers of freemium services, AVOD services, and will eventually upsell themselves to pay for online video content. Then down you have this 40 million households, which are typically your free-to-air subscribers. They consume content through DD Free Dish, which is government's free satellite service. And these are largely residing in rural market, where in the last 12, 18 months, we have seen several short video platforms which have gained a lot in popularity. Further down, you have this big bulge of 140 million odd subscribers, which are television. Earlier, the assumption was that many of these households will send and eventually be part of the pay TV ecosystem. But the young audiences that we have in India, some of them are also getting access to short video. You can see the funnel moving instead of television to online video, where many of them will content and might even want to pay for online content. So it'll be interesting to see how this trend plays out in the next 5 years. Let's have a look at the AVOD market in India. Now, AVOD market as of end the global internet majors, YouTube, Facebook, are so well entrenched in the ecosystem that they will continue to have a dominant share of the AVOD market. That doesn't mean that domestic players which have media owners. We have seen that in past, many of the broadcast OTT services, what we call as VOD players like Disney, Sony, they've also been able to carve out a share for themselves. As I said, in the last 2 years, we've also seen a lot of short video platforms gaining in popularity, particularly in rural markets. They now serve as a very important conduit for advertisers to reach the audiences in rural market. And also telcos, both Airtel, Jio, which have phenomenal reach, are now looking to monetize this reach through advertisement. So over time, as we see these different buckets of AVOD players expand their scope, we will see the overall AVOD opportunity in India expand to become a $2.6 billion revenue opportunity by 2025. On SVOD, really, we've seen a lot of downward repricing by many SVOD players. We're also seeing a lot of subsidized hard bundle offering from telco and pay TV operators. That has opened up the subscription video on demand market in India. Many of the OTT operators incentivize consumers to opt for annual packs. Now, Disney has moved completely from monthly to annual pack. Even others like Sony Live, Discovery offer a discount as high as 50 to 70% compared to their monthly pack, which incentivizes more consumers to opt for annual pack. This keeps a check on rotational churn, monthly churn. So on an average, SVOD ARPUs range at about $1 per month. One trend that we have seen just stood unabated even through the pandemic has been an investment in the online video content side, the online video content market. 2020, we saw about $700 million getting invested in online video content. This year, 2021, we will see close to about $1 billion of investment being made in online video content. Interestingly, a trend that we have seen since 2019, close to about 30% of this investments are being made to commission or acquire local content. We believe this trend will further gain traction in the coming years. Close to 40-45% of every investment made in local or online content will be towards acquiring or commissioning local content. So we also seen a sharp uptick in direct subscriptions, direct SVOD subscription between 19 to 20. In the pandemic year, we saw a threefold increase. We saw total SVOD subscriptions growing from 20 million to 60 million. In the next 5 years, we believe this growth, we'll see another 3x growth between 2025. We will see more than 200 million SVOD subscriptions in India. Of course, to attain that growth, you will see the average ARPU or yields for SVOD players will remain subpar, maybe low, sub $1. It will be at a steep discount to the average pay TV ARPU. But the overall SVOD market will expand. So as these trends play out, we believe the overall SVOD market, which currently stands at about $500 million, will grow to about $4 billion by 2025. Currently, top three players, Disney Hotstar, Amazon, Netflix account for a bulk 80% of the SWOT market. But we believe as the market opportunity expands, as new players come in, we'll see much more spreading of the market share going forward. So India will attract a lot of strategic capital. We've seen traditionally in Western markets like UK, in US, these are markets where you have a high ARPU, unlike in Asian markets, which offer huge pools of subscriber but at a low ARPU. Now, as the revenue pools in most developed markets in US, UK are kind of saturating, you will see a lot of investments being made internationally, especially in Asia and markets like India, which are important last frontiers for some of the global majors. India offers a vast pool of consumers. At the same time, Indians also have strong affinity to local content. So you'll see a lot of investments coming towards content. Close to $1 billion has already been invested by large international players into India. But India also offers, a vast pool of tech talent. It also offers a lot of labor cost arbitrage on important production processes, particularly post-production, where we are seeing a lot of investments. So Netflix, for instance, has a 3,000 plus bench for post-production in India. Amazon has its back-end operations housed in Bangalore. So a lot of strategic investments will come, not only directly making investments into content and marketing, but also on a lot of backend operations to service the rest of the world from India. We also see entry of new players. So next year we should see HBO Max rolling out sometime early next year. Subsequently, we should see launch of other players like Peacock setting up shop in India. So just to quantify and to sum up, India's overall video market stands at about $10.5 billion as of end last year. Now this will grow at a healthy 10% CAGR in the next 5 years to become a $17.5 billion revenue opportunity. Advertisement market will grow more anchored to the growth of, or the sharp revival in GDP. We expect anywhere between 7 to 8% GDP growth, which will drive growth in advertisement, particularly on television. But a lot of subscription growth going forward will actually come through online video. As the opportunity expands, you'll also see more consolidation happening, particularly in traditional television. But at the same time, as I said, entry of new players, more so in online video, will expand the opportunity in India and will attract more strategic capital. That's it from my side. You have my coordinates here, and should you have any queries, feel free to write me. And thank you very much. All the best for the rest of the event.
Thank you very much, Mihir, for setting the tone right for the M&E Tech segment.